Let's talk about the market here. We're not going to look at the weekly chart first day of the week. It's really nothing's really changed. The market's down. It's Monday, so the weekly chart. There's nothing really to show there as far as wow. Look at the market's made a big move. So we're just going to skip the weekly for now. We'll look at it maybe once or twice this week if things get going. I'd like to say I see something here that's maybe like hinting at a weakness in the market, but I can't, I really can't honestly say that. But I do see something here that's a little bit interesting. Anyway, here's some, we'll look at the daily chart, of course. Here's some support, 52.67, 51.81. Those are the two nearest supports. If we go back to something like this over here, you had these, pretty much 3, 6, 7, 8 days. There was a little day here that was kind of down, down day. Obviously, this one was kind of just flat. But out of these 8 days, it's pretty much just uptrend, and then you get this one big candlestick here. It's like 104, if I remember right. Okay. So you really just had like a one down day, and then it went up again. Typically, though, we've been seeing, strength for a few days at least, maybe 3, 4, 5 days. Some pretty decent strength, even though you got like a mixed in day here that's down, right? But overall, the trend is up, and then you get to 2 or 3 down days. Okay, here we had some strength, really just one down day. Technically, that one is too, but it's just one big down day, right? A couple days up, we get maybe 3 down days, and there's small down days. Okay, here's one over here, pretty good run, 2 down days. So it's kind of a pattern, right? We definitely see more up than down, obviously. And we get these little moments where there's a day or 2 down. Okay. So, going back to this one, I'm mentioning this one. I'm sorry, not that one. Let's just erase the screen here. I mentioned this one because it's not really about the number of days down. This is just one down. It's more about the range. This day here was like 100 and almost 104. So these 3 candlesticks, I think it was about like 60, something like this. So even though it was 3 days down, it still wasn't as much as like this one entire candlestick. Or in these 2, or really just this, sorry, these 2 here are really just one. And then these 2. So when you're looking at the market, you have to look at, how many days something happens, but also the range of it. So this range was really small compared to like this and this and this and this. Okay. So I don't get too caught up in, 3 down days. It doesn't really mean a whole lot. It's more about the range. The total range of this movement was really just like a little blip. Nothing. Okay. That's kind of typical though. 3 down days, and then we see a little bump. Of course, we had Good Friday. So Good Friday was, a federal holiday. So the markets were closed. I think even futures were closed. And then today we have a down day. So it's a little unusual. That is the one thing that stands out to me about this. This pattern's a little unusual. It's not a big deal. It isn't necessarily a sign that the market's suddenly going to make a big collapse, but it is a little unusual to see such a small movement up and then already a down day again. The only other time that's really happened, but it really hasn't happened before, like in recent times. I mean, this area here kind of did that, but the movement up was pretty decent before we got to 2 down days. Other than that, usually you don't see this kind of action where the up day is only really one up day and then you get right back into going down again. So this is just a little unusual. So it's just something I'm kind of keeping an eye on. I don't think it constitutes necessarily that, hey, the market's weakening, but it could be. So I just wanted to mention that this kind of configuration up here is a little odd. And I think Good Friday probably kind of interrupted the market. But sometimes those little interruptions turn out to be big deals. I'm just looking back. Really haven't seen that kind of pattern right there where you didn't get really much of a bounce. Like I said, this section here is kind of like that, but these two updates were at least, you know, fairly noticeable. All right, so I wanted to mention that first because I really think that's kind of interesting, just seeing that right there. Of course, we have April 14th there. The next cycle low. Obviously, this one didn't happen at all. Right, nothing happened there. I think I'll go back through this daily chart here once I finish today's video and try to look at it one more time. I don't really think anything's going to change. I mean, when you've got, this is just, you know, this is just stair step up madness, and you really can't make much out of the cycles in such a short, you know, when they're compact. This is very compact. So the cycles don't stand out here at all. I mean, they're still there, but they just definitely don't stand out. Like that one's obvious. That one's really obvious. This one is obvious. It's there. This one, I think, just, you know, or I mean, it could be this as well. So there is a little something there. And then this one right here could be this one. Did it just came late? Came a little late here, right? Let's see, when was this exactly? That was March 20th, and really didn't get down here until the 26th. That's really actually pretty late. So it's a little shaky up in this area to say that this cycle even really happened. As far as anything noticeable, it's either it came early or it came late, or it's just, you know, it just got blasted through and doesn't matter. So, you know, the cycles here on the daily, they still look okay to me. I don't really think there's anything to change just yet. But we'll keep an eye on what's kind of going on up here. I do have thoughts for about tomorrow, of course, so members, take a look at your emails tonight. And it's rare that I would disclose to non-members, to the public, what I think tomorrow's going to be. But I'm going to do it. So members don't get mad at me. Occasionally I'll do this, but I usually don't. But once in a while, I will tell the public my thoughts about tomorrow. And tomorrow, I think it's going to be a down day. Okay, there you got it. Now you know. Now, what time tomorrow? When's it going to be the biggest? What is the greatest probability of what time tomorrow? Is the market going to move down? Is it just going to start moving down right away at futures open? The Spider open, the SPX and Spider open tomorrow morning. It's already down. Wait, you know, what is that? What's going to happen there? Well, become a member and you'll find out my thoughts about that, because I have that in the hourly chart, which I'm not going to show them the public. Okay, for the members, I've already mentioned the Discord server about my thoughts for tomorrow, so make sure you read the Discord server, and I will put it in the email as well tonight. But you want to take a good look at that hourly chart, especially going into tomorrow. Now, I haven't updated the hourly chart just quite yet for tomorrow, I don't think. Or did I? Let me just look over across the office here. Yeah, I already did, actually. I might touch it up just a little bit tonight. If I feel like it needs to be looked at, I will. But so far, yeah, the hourly chart's already been set up for tomorrow. Okay, so make sure you take a look at that for members. Okay, so I do expect tomorrow to be a down day. Now, you had a good discussion day with some of the members on my who are on the Discord server, which is where all the services take place for the members. And of course, a lot of the guys and gals on there are options traders. And, you know, for members, don't get me wrong, I think options trading is fine. Do your thing. Especially, you know, if you're making money at options, go for it. Just keep it going. Just by the way, right now, I'm looking at gold, and gold, the streaming charts for gold that I have up for the members is gold took off. Bouncing real hard here. Super nice. Gold's on fire, guys. If you didn't know, gold's on fire. Gold's going to make a lot of people a lot of money this year. But anyway, back to the S&P 500 here. Kind of talking to some of the members on the Discord server today. We were kind of going back and forth a little bit about options trading versus futures trading. And like I said, options trading is not bad. It definitely has its place in the realm of trading. And I know a lot of people do very well in options. So if that's you, congratulations, keep on going, But I just want to touch on it. And I talked about this before a little bit, just going to touch on it just briefly here. My thoughts about the two, I think futures are more efficient. I think I've traded both options and futures in the past. I used to trade a lot of options. That was before I got into trading futures, I traded options and stocks and whatever else. And once I started trading futures, I never really looked back because I realized over time, not on one specific trade now, but over time, I was way more profitable in futures. And that's the key. Two similar positions in those products, options trade versus future trade, can the options be more profitable than futures? Yeah. Oh yeah. Especially if the market's volatile. If the market's volatile and there's big movements that happen quick, then options will probably outpace the futures in profitability. One of the things that can happen with futures is that you can get positions on the cheap. Now that's not always true, but sometimes that happens. You get the position on the cheap and the market makes a big move and you make a ton of money. Okay. But over the long haul, over long periods of time, like weeks and months, futures are more profitable because they're more efficient. And the reason why that is because with options, you have to deal with three different variables, right? You're dealing with, of course, direction. You have to deal with timing, right? You have to get your timing right for your entry. And of course, and there's kind of some, I call them co-villains. Okay, they're the co-conspirator villains in options, and that is, you have to deal with time decay and strike price. So the moment you take a position in options, you immediately are fighting time decay, like instantly. And in the beginning, it may not be a big deal, but as you get closer to expiration, it becomes a really big deal. Now, we were kind of talking about this a little bit back and forth on the Discord server. With futures, I never have to concern myself about a strike price because there's no such attribute in futures. There are no strike prices. And we don't really concern ourselves too much about expiration. Yes, futures do expire, but there's not really a decay factor. I mean, there kind of is a little bit if the next futures contract has a spread that's pretty big. You do need to take that into consideration, but that's not the same as decay. So we don't have a decay issue necessarily really in futures. So why is, in my opinion, since I've traded both, why do I think futures are more profitable? So let me paint this scenario. We're going to try to do apples to apples here. Let's say you take a position in options, an option position, okay, and you expect, let's just say you get your direction right. So I know options can have complex, strategies, but let's just keep it simple. Let's say you do a call or put. So let's say you get your direction right. Let's say your timing's pretty good, right? Depending on what your objective is, right? You're not going to buy a call if you anticipate the market to go down, right? You understand what I'm saying? So you get your direction right, you get your timing right. All right. And the third thing there is, of course, as an options trader, you are definitely concerned about how much is the market going to move, and really even how quickly is it going to move? Because remember, you got the time decay issue. But let's just say you get your direction correct, and you enter, your timing is good on your entry. Okay, and let's say you even get, let's say you get that right. But let's say the market does move in the direction you want to, but it only moves a little bit. It just moves like somewhat. It doesn't make a big move. It just makes kind of a smallish move. That's where options is a real problem, because time decay is going to eat against that small movement. And sometimes in that scenario, the options trader is either going to make no money, they might break even, or they might even lose money, because decay is outrunning the slow moving market, or the range of the movements is not sufficient enough for you to really extract much profit or any profit out of the market. That's the problem with options. Okay. And you're combating not enough. In that scenario, you're combating that there's relatively, I guess, low volatility, and you're combating time decay. Okay, now let's do the same thing in futures. Same thing. In futures, we don't do calls or puts. We just pick a direction, and that's that. We can either long it or short it, but it doesn't really matter. It's the same objective. So let's say I get my direction correct. I get my timing correct. And just like the options trader, I expect to, let's just say, as a futures trader, for me today, how do I word this? I'm not too concerned about how big the movement is. It's nice to get a big movement in my favor, for sure. But I have definitely a less concern than an options trader about how big the movement is. Okay, but let's just say it's the same as the options trader. I get both my direction correct and I get my timing correct. But just like the options trader scenario, let's say the market only moves a little bit. Well, guess what? In futures, I still make money, no matter what. Unless I hang around forever and a day and let the market work in the other direction and just, be an idiot and don't get out when it's profitable, which sometimes it happens. But in that scenario where the market only moved a little bit, the futures trader still makes money, because the movement is enough to extract profit out of the market. There is no time decay issue. There's no worrying about, I need a big volatile movement. None of that is a concern with futures trader. I shouldn't say it's not a concern. We like big movements the same as options traders, but it's not, we don't have to worry about, if I just get, for instance, let's say that you're trading the spider options, you might be trading SPX options, whatever it is. Let's just pick the spider. Let's say you were expecting $1 worth of movement, but it only moves 10 cents. I don't remember what the spider's intervals are. I'm just going to pick 10 cents. So you got the movement. You didn't get a lot of movement, right? You were expecting 75 cents or $1, but you only got a dime. Okay. Depending on what strike price you picked and what the time decay is, you may or may not make profit there. Okay. In futures, that translates to a full point. We don't deal with dollars and cents. We deal in points. So a dime in the spider translates to 1 point in futures. Did I make money in the futures? Yeah, I made money. It may not be a lot, depends on the number of contracts and whether I'm trading micros or I'm trading E-minis. Let's say I trade E-minis. I probably made, if my math's right, I think I made $100 on that 1 point worth of movement. Where the options trader may or may not make money there. They may have made money and they may not have made money. They may have actually lost money. And that's the catch with options. On small movements, options struggle to make profit. On futures, you're still going to make money. So even if you didn't get into, like I said in this scenario, even if you didn't really, you got your direction and timing right, but the movement was small, you can still extract profit out of the market. And that's why over time, going back to the very beginning of this whole little segue I'm talking about futures, why is it more profitable at time? That's why. Because even on the questionable trades, futures are sometimes still profitable, whereas options are not. So over time, futures continue to extract money out of the market, profit out of the market, where options don't. And my experience is over the long haul, and I'm talking months, as you're just consistently trading futures start to pull away from options. They slowly pull away. And by the end of the year, I go back and I compare my futures trading year compared to my time where I was trading options trader. I make way more money trading futures. Because now when the big movements do come, of course, options traders make a lot of money on big movements, but futures trade make big money on futures trading makes big money on big movements too. Now, is it going to be the same? Maybe not. It's hard to tell. That's because options has those factors in there. They're a little bit wishy-washy. They're just too, they're just too wishy-washy. They're unstable. Options are a little, like I said, they're not as efficient. Those variables that are there, they're designed to hurt the options trader. The time decay immediately is a turnoff. Like that product is immediately less efficient because of time decay. So I wanted to share that because my experience is over the long haul, futures are more profitable. Does that mean you should stop trading options? No, I don't think so. But I think you should incorporate it into begin to think about incorporating it into your trading strategies, right? I know I've got one or two or more members that actually look at options to help them trade futures. I think that's a great idea. I think that you can use that technique. But I also think you get in the danger, if you're used to just trading options and you're trying to look at options to help you trade futures, I think there can be some benefits to that. But the downside to it is options traders tend to be very dogmatic, meaning they really want exact prices. I hear it all the time on the Discord server. And I get it. It's no problem. You can ask those questions and I'll give my opinion about it. But options traders are always concerned about where exactly is the market going to move, to what price is going to move, because they've got to pick that strike price, man. But as a futures trader, that kind of mentality can hurt you a little bit. Sometimes you can end up gaining less profit because you're a little too dogmatic. So I would be just a little bit looser as a futures trader. In futures trading, we are more concerned about the long movements in momentum and, of course, the cycle that we're trading in, because obviously I deal with cycle analysis. We are trying to leverage the big movement through momentum and anticipating what the next cycle low is going to be. So it doesn't really matter whether you trade down from the peak down into the cycle low or you trade long out of the cycle low. You take your pick. It doesn't matter. Okay, so I don't really, as a futures trader, I don't say to myself, gee, I really got to get down to, right now as I look at the market, it's going to close here in a little bit today. The market's trading at 5292.5 in futures. In the SPDR, that'd be 529. It's probably a little bit off because they don't exactly match each other. But I don't say to myself as a futures trader, see, the market's at 5292. I've got to get it down to 5250 or 5270 or 5280 or whatever if I'm thinking about going short. Or if I was thinking about going long, I see 5292. I almost never say to myself something like, I've got to get to 5300. I don't think like that. Because as a futures trader, I don't have to. I just move with the momentum. And whatever the market's going to give me, I take it. And you should try to have a good sense for momentum. When is it dying? That's really the focus, is when is momentum dying? When it's dying, you can get out of the market. Now, do I completely ignore price points? No, I pay attention to them. I pay attention to supports, like you're seeing here. So there are some similarities with options traders. I do look at something like this, 5267. I can tell it's a bit of a support. There's 5181. Okay. And like I said, I know there's some members who trade futures, but look at options data to help them trade their futures. I think that's pretty smart, actually. Okay. They can use some of the things they learned in options trading to extract profit out of futures. But like I said, you need to be a little bit, in my opinion, looser at futures. Let that sucker run a little. Okay, let it run a little. Let the momentum and the cycle tell you when to get out, not necessarily something like, I saw a bunch of puts at certain strike price. Boy, that's my focus. That may not always be the best way to trade futures. You're looking at options data and then trading futures based on the options data is not, it probably sometimes is good, but other times I think it hurts you, okay? So just keep that in mind. We want to focus on futures. Don't be overly dogmatic on price. Yes, keep it in mind. Don't ignore it. Keep it in mind. But allow the momentum and the cycle to bring in the big bucks on futures, because over time, you should be able to extract huge money out of the market trading futures if you do it right, okay? All right, let's switch over and look. I'm just going to look at the intraday charts and we'll finish this video up. All right, so here we are in intraday chart. This is a 15-minute chart, which, by the way, if you want to become a member, stick around to the end of the video and I'll show you how to do that, okay? But, I mean, where on this chart, you know, if you just looked at this, you know, or kind of organically, let's just say you didn't know anything about my service and you don't know how I go about doing my futures trading, or even if I was an options trader, whatever, you know, you could use this chart for option trade. What is it about this chart? Okay, here's the beginning of futures. Started over here last night, Sunday night, and it's going to end right here in about another. Looks like it's going to end. If it may have already ended, because I don't see any bid and ask going on here. So I think futures is closed. But so that's the whole day from last night to here. You know, basically, not quite 24 hours. Okay, I guess we're still trading here. Not quite 24 hours, but almost. And that's the other thing about futures. You can trade them in the night. You can trade them during the day. In the options, you can't do that. So where in here was the most money made? Like if you just looked at this organically, forget about, try not to be an options or a futures trader or any kind of trader. Just look at this organically. Like where are the lines? Even forget about these lines. So it's like what stands out to you? Where's the biggest money being made? Was it over here during this flat time? Okay, even though you can't see it here, let me erase this little part here. There's a pretty big candlestick right here. So there was some money made right here in the open. Pretty big candlestick. So there's something there, right? You could say to yourself, there's money made here. Like let's say you have a tendency to be a person that trades long, which is most people. Then they're gonna see this and say, wow, there was money made here. Okay. But I just want you to think about movement. That was kind of my point earlier in this video. If you could just free your mind for a second, just think about movement. Just where is the biggest move in this picture? Well, it's clear where it's at, right? It's right here. And as a futures trader, I can tell you, because I've traded both options and futures, my mind is so much freer. I'm just looking for the biggest movement. I don't have to worry about calls or puts or fancy strategies or time decays, nothing. That doesn't even enter my mind because I don't have to deal with those variables. You follow me? I'm just thinking, the only thing I'm thinking about as a futures trader is where is the momentum and where is going to most likely be the biggest movement. Okay, well, there were two big movements, right? There was one over here, we'll put this as number one, and there was a number two. It started somewhere right around here. That's it. As a futures trader, I made money both over here and over here. Okay. All right, now let's just talk about, you know, now let's kind of go back to what I do typically when I put up videos Monday through Thursday. You know, where's the trade of the day or the trades of the day? In this case, look at the 15-minute chart. I mean, the trade of the day just stands out, right? It's just right here. And there's the big purple candlestick and it was bombs away. If I didn't trade anything else throughout this nearly 24 hours or 22 hours, whatever this is, this was the trade. It was easy peasy, 1, 2, 3. It was at like 6:30 in the morning or 6:15 or 7. It was 7 o'clock exactly. 7 a.m. this morning. This was it. This trade all the way down to 11 a.m. was massive. This was just absolutely, I can't even begin to tell you the amount of profit that was here. I'm not going to get into it because in some videos I don't always want to just throw out my trade for the day, and some people, like I said before in other videos, that people just think I'm bragging, you know. And there's a whole ego thing. So sometimes I don't get into the dollar cents part. I will share that. I do share from time to time to encourage people, but I'm not always going to share it. But you can do the math, right? I mean, here was 52.20. And I can tell you that the entry was probably more like 52.23 or 24. And it didn't stop trading until 52.90. Okay, so that's over 30 points. 30 points. Now, I know for an options trader, when a futures trader talks about points, you know, they're probably just scratching their head, doesn't mean anything. Okay? Because the math for futures is different. But I can tell you right now, 30 points is absolutely, I can't even begin to tell you how ginormous that is. In futures trading, 3 or 4 points, guys, the ugly looking 3. 3 or 4 points is big. It's pretty good money. So imagine 30 points. It's massive money. Okay? And this is just where I think futures just pull away from options. Did the options traders predict this big move? Did they predict? Some options traders probably did predict these move, right? They probably got it right. They probably predicted the market's going to pull back. But were they able to predict the entire range? I guess this equates to approximately $3 in the spider. Was the options trader able to predict ahead of time? Because they have to predict ahead of time, right, to get the strike price. To try to figure out the strike price and the time decay and the movement. And okay, were they able to predict 30 points? Probably not. Or $3? Probably not. Right, because they kind of have to factor that in, right? That's part of their strike price strategy. They're trying to figure out, what strike price to pick to extract the most profit. But in futures, I never have to think like that. I don't care if I got out, it doesn't matter. 10 points, I just wait because I see the market's still weak. It goes 15, I just keep waiting. And 20, and 25, and 30. I didn't have to back here as an options trader try to figure out what strike price to extract the most profit. At no time did I ever have to worry about picking a 5,300 strike price or anything. I just let the market cha-ching, 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 cha-ching. Just let the coins roll in. Now, I get it as an options position. You're making money too as the market goes down if you picked it right. But my point is with a strike price, you kind of limit yourself. Because you in other words, let's be honest, as an options trader, if you go back and look at the end of the day, you can figure out which strike price was the most profitable, correct? You could do that. In hindsight, as an options trader, you could go back, like back over here, let's say, whatever. Maybe you did it on, that's another thing about options. You got to think way ahead of time, which is a pain in the butt. But let's say you did it on Thursday before the market closed. Because obviously, Good Friday we were closed, and you can't trade at night as an options trader, so you had to do it way back on Thursday. See, everybody follow me now? How pain of a butt options are? You had to do it all the way back on Thursday to try to predict Monday. Okay, so let's say you go back and I know options traders can do this because I've done it. You go back and you look and see which strike price was the most profitable. Oh, it was such and such strike price was the most profitable, right? But with futures, I never have to think like that. There is no such thing as I have to try to pick a strike price to be the most profitable. Nope. I just make money until this big old decline runs out of gas. And it's easy to know when it ran out of gas. It tells you it's out of gas. Right? The hourly chart especially. This is just a 15-minute chart, but the hourly chart, intraday, today, oh my gosh. Okay, since this is share all day, which I don't normally show this, but I'm going to show it. I'm not going to show the cycles, okay? I'm just going to show the hourly chart. Here it is. I mean, look at this. The hourly chart tells you it's running out of gas. Heck, the Gettys Plus indicator even told you the market's going the other way now. So you might just give a little bit back here, right? Tiny amount, and you're out. All right, so I want to share that today because I think people I think some traders who start out in stocks are very cautious about options because they hear about how risky options are, right? And then eventually some of them start trading options. Like, this is great, options are awesome. I make a lot of money trading options. Well, it's the same thing when you move from options to futures. Okay, that apprehension because you don't know the product is the only reason why you're not trading it. But once you know it and understand the math around it, and you start trading it and extracting profits out of the market, at least my experience, and this may not be true for everybody, my experience is I'm more profitable futures trader than I ever was options traders. I think that'll always be the case because it's just simplified. Is there risk? Yeah, there's definitely risk. There's other factors about futures trading that is maybe more difficult. There's higher margin requirements. Where with options, like I said earlier, you can pick cheap options. Okay, that's it. For those who want to become a member, stick around to the very end. Okay, if you want to become a member, that's great. There is a discord.com link right below this video on YouTube in the description. Just make sure you read those instructions carefully. Then click on the discord.com link. It's going to bring you over to this Get a Server. Then click on Server Shop. It's going to bring you to this page right here. $7.99 a month, guys and gals. Very, very affordable. Okay, you get the streaming charts down here for the S&P 500. You get the 5-minute, the 15-minute, and the 1 hour. Okay, you also get gold, because I added that about a week or two ago. You get the gold streaming charts too now. Okay, so when you join, just ask me, hey, Geddes, where's the link for gold? And I'll give it to you, okay? And you can watch the streaming charts for gold, which gold right now is on fire. It is absolutely dominating the S&P 500. It's making it look like child's play. Lots of money being made in gold. Okay, the alerts that come with that Geddes Plus indicator that I showed you in the trade of the day in the 15-minute chart, they go here. They get sent from the streaming charts to here. So really, really nice. Okay, and also there's gold alerts. So the streaming chart sends gold alerts to this channel. Okay, so you're getting 2 sets of streaming charts, S&P 500 and gold. You get alerts to go with that. At the end of each day, Monday through Thursday, I put premium symbols in this channel. I just saw some nice symbols in there, by the way, today. Quite a nice few future symbols, and there's optionable stocks in there as well as other symbols. You might want to check it out. Pretty nice. Okay, in this Geddes Only post channel, this is where I put the video link. So each day the members can go in there and watch the video, or they can click on it and take them to YouTube, your choice. Okay, I also notify the members every night when the emails go out to the members. So you can also turn notifications on that channel too. You just right click and turn notifications on. Speaking of emails, every night I send out emails. So if you want to be on the email list, put your email in the emails only channel here, and you'll get a daily chart of the S&P 500. It has the daily cycles on there. It has support lines on there. Really good chart. A lot of members just sign up just for the email. They don't do intraday trading, so they just want the email. Occasionally I trade fixed income. If I do trade this fixed income, I'll put it in here. It's usually corporate bonds. And then these 2 channels up here is where we do basically most of our chatting. So just think about this. Everything in this rectangle you're getting for $7.99 a month. You're getting S&P 500 and gold streaming charts with the respective alerts that go along with it. You're getting premium symbols. You're getting the nightly email. Of course, you're getting chat. And yes, I do provide support. So usually the only support that happens here, really, guys and gals, is if you're not getting emails at night because Discord's playing around with the people's handles and making them change their Discord name. Just let me know. You can put it in user member chat. Probably better to put an emails only channel. Just say, hey, I'm not getting my emails, and I'll see what's going on. Okay, all this is members only. The public doesn't get access to anything in this rectangle. Okay. Let's talk about the rules. In here is the disclaimer that I'm not a financial advisor. I do not give financial advice. Everything on the server, no matter if it's me or anybody else that's posting it, is strictly educational purposes only, just like this video, okay? Educational purposes only. No financial advice is implied whatsoever. You are responsible for your own trades. Yes, this service, I believe in my humble opinion, will help you become a much better trader and profitable trader if you're patient, okay? But you're the one pulling the trigger for your trades, okay? Also in here is the refund rules, so make sure you read that. And lastly, there's rules in there about please be nice to everybody else, be respectful, don't post dirty stuff or nasty language or anything like this. Disrespectful or nasty or ugly or any of that, I won't tolerate it, okay? I'm a conservative, I'm a Christian. That's the way it is. I like to keep my server, this service and this server clean, okay? You can come if you're a Democrat. Yes, you can still join my service, okay? Just don't spew your political nonsense on my server, okay? If you do, you're going to get warned. If you're doing nasty stuff, I'm going to warn you. If it gets really bad, I'm going to kick you. And if it gets really, really bad, I'm going to ban you. Okay, so don't do that. And remember, please read the refund rules. It's on your responsibility to read them. Okay. All right, I think that pretty much covers it. I hope everybody had an awesome day. Today was a massive, massive profitable day. And you heard my opinion, everybody, about tomorrow. Members, make sure you read your emails about tomorrow, and make sure you look at the hourly chart, the streaming chart for the S&P 500, because I think we're going to get something tomorrow. And the win is going to be in the email. Okay. All right. I think that pretty much covers it. Happy trading, everybody. God bless everybody. We'll talk to you all real soon again next time.